Chamath is famous for anything. It's, for lack of a better word, he's a great talker.
There are 150, and they're all men, that run the world. Period, full stop.
He is almost becoming one of those one-name people, at least in financial circles.
Chamath.
He's brash. He's not shy about his opinions.
Your behaviors, you don't realize it, but you are being programmed.
Goldman Sachs sucks. Who cares? No smart person goes and works at Goldman.
Some people would compare him to Elon Musk, which also uses his social media influence to communicate with investors. For some target company, that's the appeal because you get the instant name recognition once you're associated with Chamath.
So he was somebody that I saw as one of the biggest boosters of this crazy bubble and also one of its biggest beneficiaries. In particular, he was one of the leaders of the boom for special purpose acquisition companies, otherwise known as SPACs. No one quite knows exactly why the market for SPACs exploded, but everyone gives Chamath a lot of credit. When I got back from paternity leave earlier this year, I saw that markets seemed to have gone totally crazy. Investors were buying up all sorts of stocks with no regard for the company's earnings or profits or any of the sort of traditional things that boring investors used to look at.
Video game retailer GameStop is set to continue their head-spinning ascent today.
And then, of course, this AMC phenomenon. We saw this wild ride for AMC investors on this retail trade-driven frenzy.
Everyone was having a lot of fun driving stocks up to the moon, as they say, and I wanted to look at a promoter who was encouraging this boom.
Startup Brian, welcome to Chamath. Let's hear it right now.
And I found a guy by the name of Chamath Palihapitiya.
I have lore. I've worked in 3 of like the top 5 internet businesses ever created.
I didn't have to look very hard. He's super popular on Twitter. He's got 1.5 million followers, and he's always talking about the stocks that he's taking public, how great these are to invest in.
We are involved in probably 10 to 15 billion dollar unicorn companies.
Palihapitiya likes to tell the story of his upbringing because it's a bit of a rags to riches, American dream type story.
Rich or poor?
My parents were kind of ruling class in Sri Lanka, and then in the Civil War we emigrated to Canada, and I grew up on welfare. My dad struggled to find a job, worked at a photocopy store for a while. When I got my first job, it was at Burger King. I'd take the money, and I'd have to give it to my parents, and we would buy bus passes.
He went to the University of Waterloo, where he studied electrical engineering. After college, he did what a lot of people do who are wanting to make some money. He went into investment banking, traded derivatives.
My first job out of college, I made $55,000. And the reason I liked that job, again, it kind of like, it played on my desire to take risk and, quote unquote, gamble.
But when he didn't get a bonus one year, got angry and quit, moved to California to seek his fortune in the first dot-com bubble.
I wanted to be emancipated. I wanted to find my own path to be able to not have to be a subject of the man.
He went over to Facebook headquarters for what he didn't really think was a job interview, at least as he's told the story. He met with one of Facebook's top executives who was kind of put out by this person acting like Chamath was there to be interviewed. And at that time, Facebook was still just starting to build off its roots on college campuses and high schools. And Chamath convinced founder Mark Zuckerberg, who was then just about 23 years old, that what Facebook really needed was a dedicated team devoted to growth, and that he was the person to run the team. By the time he left Facebook in 2011, the company had almost 1 billion users, and Chamath had made a name for himself and also started making angel investments on the side. with his personal money.
It took me into my early 40s to say, what is going to change this sort of lingering, burning sensation in my stomach? And so I just went off to fix these things. And professionally, the most important thing is I said, I'm building somebody else's company. And I'm sure all of you guys, founders, have felt that moment where it's like, am I building the thing that I want, or am I building the thing that somebody else wants?
After he left Facebook, he tore into them.
Polyhapatia burns down what he built. He's imploding. What's the story?
Said that they were ripping apart the social fabric of how society works.
The short-term dopamine-driven feedback loops that we have created are destroying how society works.
In 2011, Chamath left Facebook to start his own venture capital fund. He called it Social Capital.
I wanted to make money for people that I thought were interesting and good. I didn't want to make money for some other random person, some endowment, some pension fund, some university that isn't doing anything good with the money.
He had a plan to automate the investing process, to remove biases, and he did make several investments into companies with those aims. But as it turned out, best bets, the ones that really made money, were more traditional, more similar to what other firms were doing, like Slack, the business chat software, or Amazon, which he said was going to rise sharply at a time when people thought maybe it had already was overvalued. Got into Bitcoin very early, recommended Tesla. In 2018, despite great returns at Social Capital,
We're absolutely obliterating the market. We're probably like the public side vehicle is probably like 30 points of alpha above the NASDAQ. I mean, it's really good.
the company ran into a lot of trouble. High-level executives clashed with Chamath and left. Investors complained about a change in focus, and Chamath was left with what was a much smaller firm, managing mostly his own money. This led him to have more time to devote to a side project he'd started a year earlier called a SPAC.
Tech SPAC and SPAC. SPACs.
A SPAC is a shell company that goes public. They raise money from public investors, and the management team of this shell vehicle then have 2 years to find an acquisition, and during those 2 years, the shell company trades publicly on the exchange.
Tell me, from your perspective, is there a limit?
Investors give money to a sponsor who says that they're going to use it to buy something. And for every $10 that you hand to the sponsor gives you 1 share. And these shares are traded on the stock market. SPAC got a bad name in the 80s when many of the people running them would raise money and then just steal it for themselves. They were rehabilitated by a broker in Long Island named David Nussbaum. Came up with a important protection for investors, which was that they would raise money and then put it in the bank instead of stealing it. When a company goes public in a traditional IPO, they are very limited in what they can say about their prospects for the future. The underwriter of the IPO, they project that, say, we're going to make $1 billion next year, that investors could sue them if it doesn't come true.
One of the biggest advantage for a company to go public through a SPAC is that they can market forward-looking projections, which really benefits the company that don't have any revenue at this very point that they want to go public. So Chamath has really become like the poster of the SPAC boom.
Given the fact that Virgin Galactic now just directly listed on the exchange through Social Capital's SPAC, do you see this as a model that other companies are going to adopt?
I do, and I hope that this is a really good litmus test and a case study.
He was the person that kind of started this whole frenzy in 2019 when he took Virgin Galactic public.
I think that we found the absolute best company, something that'll thrive in the public markets, and frankly, something that's going to capture an enormous amount of consumer interest, giving the average person a chance to own a bit of space.
One of his things is every time he does a deal, he publishes his rationale behind making this investment. And people really love it. And I think as a result, it really brought people's attention that this is not your very complicated financial engineering, but it's an instrument that your mom and pop investors could participate.
Investors were so eager to get a piece of Chamath's deal that even before his SPACs would announce a target, when they were just piles of money, people were paying $15 a share. So you're essentially paying $15 for a $10 bill with the hopes that Chamath is going to buy something so great that you'll make up that deficit later.
To me, at least, much more interesting to say you failed trying something crazy and huge than something incremental and just frankly, the fourth order derivative of something that was done 10 years ago.
In 2019, there was about $12 billion raised in new SPACs. And so far this year, just 5 months in, we've seen $100 billion raised globally.
Now it seems like practically every underemployed rich guy with some name recognition has his own SPAC. There are SPACs advised by retired athletes like Alex Rodriguez or Shaquille O'Neal, and SPACs advised by washed-up politicians like Paul Ryan or John Delaney. And there's even one SPAC that has both NBA legend David Robinson and former Senate Majority Leader Bill Frist working on it. Polyhapatia has raised 6 SPACs so far, more than $4 billion.
His vision is to raise 26 SPACs. He names his SPACs alphabetically, so IPO A, and he's now raised up to IPO F.
I researched each of the companies that Polyhapatia had taken public. One that really caught my attention was Clover Health.
We are really excited after months of diligence and work to announce a merger between IPOC and Clover Health to take Clover Health public.
He talked up this company like it was a tech company that was about to change healthcare.
Clover is already growing 2 to 3 times faster than their next 9 nearest competitors. What that's created is a business that last year alone did almost $460 million of revenue, and in 2023 will do $1.7 billion of revenue.
Chamath always tweets a one-page thesis about why you should buy whatever stock he's pitching. And in the one for Clover, he said the company had 41,000 members now, but would have 273,000 next year. So I decided to dig in a little bit. Clover had actually been around for almost a decade when the merger with Chamath's SPAC was announced. And it's lost money the whole time. It's missed its growth targets. It was clear that this was really a smallish insurance company that almost exclusively sold Medicare Advantage plans to older people in New Jersey. They were losing a couple $100 million a year. The company is saying that it's put all that behind it because it's developed a new technology that's the culmination of all its research. And this technology is called Clover Assistant.
The Clover Assistant is a web application, and a physician uses it every visit that they have with one of our members.
Clover says that this technology will enable all doctors to offer better care, but I spoke to several former employees of Clover, and they said that the rollout was rockier than the company had presented it. And they said that many doctors who are signed up to use this technology don't actually use it themselves. And when you look at Clover's financial results, the type of stuff that you'd be forced to rely on in a traditional IPO instead of a SPAC, you see that every quarter the company is spending more money than it makes. For a while, it seemed like everything he touched turned to gold. And if you had bought blindly into all of his deals, you would have made a lot of money. But sentiment changed. In February, a short seller published a report that shocked Clover investors. It was from a group called Hindenburg Research, and it's really run by a guy named Nate Anderson out of his apartment in Manhattan. Anderson called out Chamath, and he said that Chamath had misled investors. Clover wasn't really a tech company, and that in fact doctors didn't like using its software. Anderson's report proved to be pretty well timed. The market for SPACs peaked around February, and from February to March, the average SPAC dropped about 17%. And Polyhapatia SPACs, which had climbed higher, also dropped further. In Virgin Galactic, his first SPAC, he sold $300 million worth of stock, more than enough to cover what he put in. And on Clover Health, about doubled his money, despite the stock dropping quite a bit since he announced the deal.
I think that SPACs are very much here to stay. Back in the, using the language of inequality, it evens the playing field. It democratizes access to high-growth companies.
Since that initial slide, some of Chamath's SPACs have recovered a bit, but most investors who bought in early in the year when the bubble was inflating are still way underwater. Chamath didn't respond to a request to be interviewed for this video. The appeal of Chamath was that if he put his name on something, it might triple. Now, it's unclear whether he's going to be able to keep raising them or to keep acquiring companies at the pace that he had. If a bank like JP Morgan underwrites one bad IPO, it doesn't affect their brand so much because they've got so many that they've done over the years. But Polyhapatia's brand, his identity was sort of built on this idea that he can't miss. And now that he has missed, it's not clear if he'll be able to keep this up.